Hello YouTubers, Alaska Prepper here. Ladies and gentlemen, your money in the bank is in danger. Let me tell you why. Many people feel that if something happens to the banking system, to a bank, to two banks, to all banks, whether it's a major crisis, meaning a systemic crisis that's across the board, or just a national crisis in one country, or just a regional crisis, that their money is insured. And feel at ease, your money is insured. But what I'm about to show you here will take that ease away and maybe make you reconsider what you want to do with that big pile of cash that you have in the bank. Before I continue, let me tell you that I'm not a financial advisor, and I have to say that because this is the internet. But what I'm going to show you here is not what I think. It's what's actually out there, put out there by the Fdic. We all think that the Fdic insures our deposits into whatever bank we put our money in or deposit our money into up to $250,000. And that's what they say. And that is what is written into law, right? But is that what would happen should we have a systemic collapse of the banking system? But AP, we're not going to have a systemic collapse of the banking system. Have you looked around? Have you seen how other countries are doing? And here I'm talking from a stance of the United States. So when I say, have you seen how other countries are doing? That's what I'm talking about. Have you seen what the financial system looks like in China? Have you seen what the financial system looks like in Europe? Have you seen what it looks like in other countries? Third world countries are far worse off than Western nations are, in my opinion. But I believe that when the Western nations go down, it is going to be terrible for everyone in the world, not just those nations, unless you're one of those few economies that have insulated yourselves against the Federal Reserve note. But what I'm talking about here is you specifically, ladies and gentlemen, those of you that fall under the Fdic, that think that your money is safe just because we have an Fdic that says, hey, your money's insured up to $250,000, so don't worry about it. Well, let me show you right now how much of a, in my opinion, a lie that is. I'm going to leave the link to both of these sites so you can revisit them if you'd like. But as you can see, this is from the Fdic that they put out. And I'm going to bring it all the way to the bottom where it's going to show you coverage limits. I'm going to read this for you. Coverage limits and when banks fail. All right. The standard insurance amount is $250,000 per depositor per insured bank for each account ownership category. So it means that if you have millions of dollars, you can go and open different accounts in different banks. As long as you keep that amount in there, the balance, $250,000 or less, that money is supposedly insured. The Fdic provides separate coverage for deposits held in different account ownership categories. Depositors may qualify for coverage over $250,000 if they have funds in different ownership categories and all Fdic requirements are met. All deposits that our account holders has in the same ownership category at the same bank are added together and insured up to the standard insurance amount. So meaning if you're going to try and play the system and say, hey, I'll just open up a couple of different accounts in the same bank and put $250,000 in each account in the same bank, well, both of those accounts are going to be added up, and whatever is above $250,000, you will not be insured for. I believe that's what they're saying there. Well, what happens when a bank fails? Many people think that the Fdic is just an insurance agency that takes care of insuring your cash up to $250K in a bank if a bank fails. But it's not that. It's also, it's also a receivership, meaning that they pretty much take ownership of managing the bank and disposing whatever funds or whatever assets that bank may have in order to pay back its creditors, meaning you're a creditor if you're a depositor, right? And then they will follow it up with whatever they have to pay for the insurance that they're providing. Because understand this, banks actually pay for this insurance. But is what banks are paying for that insurance, is it really worth it? Because does the Fdic actually have the ability to pay it back? So let's go ahead and read real quick right here. A bank failure is the closing of a bank by a federal or state banking regulatory agency, generally resulting from the bank's inability to meet its obligations to depositors and others. And remember that a bank's assets are not the money that it has. A bank's liability is actually the deposits that are made. So when you deposit money into a bank, and I'm saying money here, meaning fiat currency, hopefully you all can follow along with that. I say money because it's easier to say than fiat currency all the time. But whenever you deposit money in a bank, you just became a creditor to that bank. It means you loaned that money to that bank. That bank can use that money to invest and pretty much do whatever they want to do with it. You are now a creditor. And whenever you put money in a bank, that money that you put in a bank is actually a liability to that bank, right? Because they have to make sure that they can pay you that money back whenever you want to take that money out. So it's really a liability. A bank, in my opinion, doesn't have very many assets. Assets for a bank would be like bonds. It would be actually their physical building. So let's say, for example, a bank shuts down. The physical building can be sold and can be put into the receivership in order to make everyone whole, or as what the FDIC would do is make everyone whole to a certain amount and then they would cover the rest. But what if we have a systemic crisis? And that's what we're going to cover next year as soon as I finish this. FDIC deposit insurance covers the balance of each depositor's account, dollar for dollar, up to the insurance limit, including principal and any accrued interest through the date of the insured bank's closing. The FDIC acts in two capacities following a bank failure. The first one is they are the insurer, just like we said. The second one, they are the receiver of the failed bank. The FDIC assumes the task of collecting and selling the assets of the failed bank and settling its debts, including claims for deposits in excess of the insured limit. Now, ladies and gentlemen, this all sounds great. It sounds great, but I did a video, I think it was within a week ago, that insurance companies in Florida, I think it was 6 of them, had claimed bankruptcy because of Hurricane Ian, meaning that they did not have enough money in their account in order to cover all of the claims that the people had for damage to their homes and probably vehicles also due to Hurricane Ian. Well, the FDIC is an insurance company just as well. So if the FDIC is going to insure the amount of money that you have in the bank, as long as it's below $250,000, they have to have that money, right? Well, I went ahead and took a little look, and you can do all this research yourself, ladies and gentlemen. It's very simple to do. It didn't take me a long time to do this, notwithstanding that I already pretty much knew this information and knew where to look. But you just type it in to DuckDuckGo or Google or whatever you want to use, and it will come up and you can find it. But I'm going to leave the links for you. So I went on to the interweb and I asked, hey, how much money is deposited in all of the banks in the United States of America? And this is what I came up with. U.S. bank total deposits as of the 31st of March of 2022. So it seems that they're missing the last quarter or so. But this is relevant, all right? We can go with this because more than likely it's more now than was then, because you can see here that the trend from the years past is going up in dollar amount. But let's just say $20 trillion. As of 31 March of 2022, all of the deposits in all of the banks in the United States of America totaled $19.93 trillion. So we'll just say $20 trillion, right? So I would say, if I remember reading this correctly, I didn't pull this information up, but all of the accounts in all of these banks that fall within the restrictions of the FDIC, meaning that there are accounts that have $250,000 or less, it was about 13 or 14 trillion dollars. So it wasn't the full amount that all of the banks have, because remember, the accounts are only insured up to a certain amount. It was like 13 or 14 trillion dollars. But let's be very conservative. Let's be very generous with the numbers, and let's say that it's only $10 trillion. Let's say that only half of the money in United States banks that are being held, from deposits equals to about half of what they have. So about $10 trillion instead of the 20. Like I said, let's be conservative and very generous with that number. So it would lead people to think that the FDIC would be able to cover $10 trillion if that's what is insurable. Well, just like those insurance companies in Florida defaulted and went bankrupt because they didn't have the money to cover it, should we ever have some kind of a systemic crisis? And I would say that we are in a time in our history where having a systemic banking crisis is more likely than not. And there are examples throughout history where this has happened. In the Great Depression, banks were defaulting and going bankrupt left and right. And sometimes it took years for those people to get their money back, if they got their money back. Back in the small island off of Greece, I believe it is, Cyprus, a few years back, they had what is called a bail-in, where the bank was insolvent. So what they decided to do instead of having the public bail them out with public funds, i.e. government funds that they took from the public and taxes, they went ahead and bailed themselves out with the people's deposits. That's called a bail-in. And there is a law in the United States that now allows banks to have bail-ins instead of bailouts. So before the FDIC even gets involved, the banks will be able to pretty much give you a haircut, take a percentage of what you have in there in order to try to help themselves out of the holes that they've dug themselves into. So let's take a look and see, can the FDIC really cover what the banks have in deposits so that they can make you whole again? And again, this is a site from the FDIC, and I went ahead and highlighted this because Deposit Insurance Fund, DIF, is a word that is used down below where I'm going to go over it with you. So I want you to know what I mean. Deposit Insurance Fund stands for DIF. That's the acronym for Deposit Insurance Funds. And this is very simply put, ladies and gentlemen. There is absolutely no way that the FDIC can cover the deposits in United States banks. And I'm just going to read it to you. Let's see. The DIF balance has risen every quarter since the end of 2009. That's a good thing, right? And stood at a record $119.4 billion on March 31, 2021, up from $110.3 billion. And at the end of 2019, it was $110 billion, and at the end of March 31st, 2021, it was 119. So that's a good thing, right? Well, the reserve ratio stood at 1.25%, down from 1.41% in 2019. The reserve ratio stood at 1.25%. What does that mean? That means, ladies and gentlemen, that if they take the money that they have allocated to pay out any insurance claims for banks going bust, and then they take all of the assets that they would sell off, it'd be roughly 1.25%. So do you remember that $10 trillion that we talked about? That all of the banks put together have roughly $20 trillion in deposits. But then if we take out $10 trillion for accounts that are not insurable because they're above $250,000, or monies that are above $250,000, let's go ahead and take out our handy dandy calculator, shall we? So now that we have our handy dandy calculator, we're going to go ahead and say $10 trillion. It's a lot of zeros. Look at that. That's just billion. $10 trillion, ladies and gentlemen. Let's go ahead and divide that by, or multiply that times 1.25% times 0.01. And they did say 1.25, right? Let's see, where is it? Yes, 1.25 right here. Okay, 1.25. 25. They have roughly $125 billion. So the FDIC has roughly $125 billion in order to pay off insurance claims in case banks fail. Now the question is this: do you think that we will have a systemic crisis? If you do, then you will end up getting about 1.25% of what you have in your banks. That's about it. If you don't think that we will ever have a systemic crisis, then leave your money in the bank if that's your choice. It's your choice either way. But the question is this: do you think that the probabilities of us having a systemic crisis is more or less than not having one? And if you think it's more, do you think that maybe you ought to have some of your money out of the bank? And if you think there's no probability whatsoever, then just leave your money in the bank. Now, some people may ask this question, so let me go ahead and cover it. But AP, if that happened and the FDIC didn't have the money that they needed in order to fulfill the promises that they made to ensure all accounts up to $250,000, wouldn't the government just print that money? Bingo. I believe that the government would back up the FDIC and print that money. But imagine what would happen if the government printed $10 trillion. Let's not even talk about the 19 or 20 trillion that's in deposits. Let's say they just printed 10 trillion to satisfy everyone that needed their money. What do you think that would do to inflation? I had a great experience today, and it was actually at the dentist office. Went to the dentist office to get my little pearly yellows cleaned. And on my way out, I was talking to one of the workers there, a very nice girl who actually has moved up here with her husband and her three kids. She's got a little girl and two boys. They moved up here 3 years ago. And she's only been working there for like, I don't know, about a year and a half, 2 years now, I think. Or maybe it's been 3 years. But anyways, we started talking about inflation. And guess what? She started talking about silver. She started talking about how the government printing money is devaluing our dollars. So, of course, I stayed there for about an extra half hour just talking about that stuff. And it brings my heart joy, ladies and gentlemen, when I talk to someone out in the public that actually knows what's going on and are protecting themselves against what will happen eventually. We have no choice. It's mathematics. So I hope that you got something out of this. I just want you to understand that your money is not safe in the bank. That's my opinion. But you have to do your own research, ladies and gentlemen, and you have to do what fits you. Having said that, have a great day. Remember to be good to each other. When good people do good things happen. Remember to reach one, teach one, and repeat. If we all did this, the world would be a better place, and you know that it will be a better place. Many blessings to all of you and your families. I'm Alaska Prepper. I am out.